Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from July 7th to July 11th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from July 7th to July 11th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Eurozone retail sales data, which could provide early direction for Euro traders. Tuesday brings Australian NAB business confidence, followed by the highly anticipated Reserve Bank of Australia interest rate decision, where the central bank is expected to cut rates to 3.6% from the current 3.85%. Later in the day, we'll see Canadian PPI data. Wednesday features the Reserve Bank of New Zealand interest rate decision, where the RBNZ is now expected to maintain rates at 3.25%. We'll also see US FOMC minutes, UK RICS house price balance, and Japanese PPI figures. Thursday includes US initial jobless claims data. Friday concludes with UK industrial production and GDP data, followed by Canadian employment figures including unemployment rate and employment change. This week's key market-moving events will be the central bank decisions on Tuesday and Wednesday. The RBA interest rate decision is expected to generate significant volatility for the Australian dollar, while the RBNZ decision should create substantial movement in the New Zealand dollar as both central banks continue their easing cycles. Now, let's go to the technical analysis. This week, we'll focus on the US dollar against the Canadian dollar and the New Zealand dollar against the US dollar, as both instruments face significant data releases and central bank decisions. Let's start with the US dollar against the Canadian dollar. Looking at the daily chart, the dollar-Canadian pair is currently trading around 1.3603, showing a clear downtrend and trading below the 20-day moving average, the red line, which is acting as dynamic resistance. The pair has been under significant pressure and appears to be testing key support levels. Looking at important levels, the US dollar against the Canadian dollar has support at 1.3501 and 1.3417, while resistance stands at 1.3721 and 1.3813. The price is currently approaching the first support level, with the stochastic oscillator in oversold territory, suggesting potential for a technical bounce. Tuesday's Canadian PPI data could provide some volatility, while Friday's Canadian employment figures will be crucial for the pair's direction. Canadian employment is expected to show modest growth of 10,000 new jobs in June, with the unemployment rate holding steady at 7%. Any surprise in these figures could drive significant movement, especially given the pair's current position near technical support. Now, let's turn to the New Zealand dollar against the US dollar. On the daily chart, the New Zealand dollar is currently trading around 0.6056, demonstrating strong bullish momentum and trading above the 20-day moving average, the red line, which is acting as dynamic support. The pair has shown impressive strength, breaking above key resistance levels. Looking at important levels, the Kiwi dollar has support at 0.6004 and 0.5937, while resistance can be found at 0.6100 and 0.6160. The price is currently testing the first resistance level. The stochastic oscillator has pulled back from overbought territory and is currently around the 50 level, suggesting there's room for further upside momentum if supported by fundamental catalysts. Wednesday's RBNZ interest rate decision will be the most significant event for this pair, with the central bank now expected to maintain rates at 3.25%. The current technical setup is particularly interesting, with the pair testing key resistance at 0.6100 and the stochastic in a neutral position rather than overbought. There's potential for a significant breakout if the RBNZ maintains rates as expected or provides a hawkish tone. This would be supportive for the Kiwi dollar, as markets may have been pricing in further cuts. However, if the RBNZ surprises with a rate cut or signals future easing, the pair could reject this resistance level and pull back toward support. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's RBNZ decision and Friday's Canadian employment data, as these events can cause sudden movements and potential technical breakouts or reversals. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.